Welcome to BigONE Weekly News Update. I'm Gavin. The 42nd week of 2025 saw continued weakness across digital asset markets, with Bitcoin, BTC, dipping below the $100,000 mark midweek for the first time since June. The leading cryptocurrency fell 4.7% to around $104,700, while Ethereum, ETH, dropped 7.8% to $3,580. BNB slid 7.8% to $996, and Solana, SOL, plunged 12% to $164. The decline extended to publicly listed digital asset treasury firms. MicroStrategy shares dropped 25%, Bitmine Immersion tumbled over 30%, and treasury stock premiums normalized. In a notable move, Paris-based Sequence Communications sold 970 BTC to repay debt, marking the first significant Bitcoin sell-off by a listed corporate treasury this cycle. Altcoins diverge amid post-dip recovery. Following the market's sharp sell-off on November 3rd, altcoins displayed mixed recovery trends. Privacy-focused tokens such as Stash, CC, alongside established public and storage chains like Internet Computer, ICP, and Filecoin, FIL, led the rebound, signaling renewed investor interest in utility-driven sectors. Sutify risks resurface after balancer exploit. During the November 3rd downturn, decentralized exchange balancer suffered a $120 million exploit, triggering cascading failures among several market-neutral and synthetic stablecoin projects including XUSD and DUSD. The incidents reignited debate around the Sutify, centralized decentralized finance model. Unlike earlier cycles when synthetic stablecoins were fully collateralized and transparent on-chain, many current projects have migrated off-chain, creating zero-cost synthetic dollars with opaque asset backing and arbitrarily set yields. This trend has raised concerns about auditability, collateral integrity, and the actual use of investor funds. Global markets. Stocks fall as U.S. shutdown looms. Global equities ended the week lower amid weak U.S. employment data, political uncertainty over a potential government shutdown, and fading enthusiasm for AI stocks. S&P 500 fell 1.63%. Nasdaq dropped 3.04%. Dow Jones lost 1.21%. Russell 2000 declined 1.88%. Europe Stoxx 600 slipped 1.24%. Meanwhile, U.S. Treasury yields steepened slightly. The dollar index weakened by 0.3%, and gold gained 0.3% as investors sought safety. Crypto deleveraging nears completion. The cryptocurrency market has now corrected roughly 20% from its all-time highs, with the sharpest liquidation wave occurring between October 10th to 11th, followed by smaller forced sell-offs on November 3rd. While the balancer exploit worsened sentiment, analysts note that long-term holder sell-offs and prior leverage unwinds were already pressuring prices. Data shows that Bitcoin's perpetual futures open interest to market cap ratio, a key measure of leverage, has reverted to its long-term average, indicating that most deleveraging is complete. Ethereum's futures displayed a similar pattern, though CME data showed ETH experienced more forced liquidations than BTC. ETF flows remain resilient. Despite recent volatility, spot crypto ETFs have seen only mild redemptions in recent weeks, far smaller than the significant inflows recorded earlier in October. This suggests that institutional demand remains steady, even amid risk-off sentiment. Analyst outlook: Bitcoin still undervalued. In its latest Global Asset Weekly, JP Morgan compared Bitcoin's volatility-adjusted valuation to gold, concluding that BTC is currently trading about $68,000 below gold's equivalent price. By the end of 2024, however, the bank projects Bitcoin could rise to be $36,000 above that level, implying substantial upside potential over the next 6 to 12 months. Liquidity surge expected as U.S. shutdown ends. Market attention this week turns to Washington, where Democrats and Republicans have reached a tentative agreement to end the government shutdown. Once finalized, the drawdown of the U.S. Treasury General Account, TGA, is expected to inject liquidity into financial markets, potentially setting the stage for a year-end liquidity surge. Recent strains in the U.S. repo market should also ease as funding conditions normalize. Join BigONE today and take advantage of the growing cryptocurrency market.